Hey guys, this is your girl, Ashira Nelson from SavvyGirlMoney.com. Thank you for joining me. I hope you got to check out my last video. If not, go check it out. It was a good one. I don't want you to miss that information. I know it can really help you. So definitely go check it out after this video. Today, I want to talk about a message that I got on my Savvy Girl Money Facebook page. If you have not done so, please make sure you go like that page. I provide tips on that page where I give financial advice, spending tips. It ranges. So if you have a question, you can go there. A lot happens on that page, so make sure you go like that page. So one of the messages that I got on there was, which I understand why I got it too, because right now, if you did not file your tax return back in April, tax returns are due. It's extension time. So it's extension filing time. So it's a busy time, and a lot of people don't file in April, which a lot of people don't even know that, but a lot of people actually do not file in April. They wait until the October deadline. So I got a question, which was, I filed my taxes earlier this month, and I owe the IRS $3,200. And when I first read this question, or when I first read this statement, I'm like, I hope they're not asking me to pay for it, because I can't. But no, let me keep going. So they said, I owe the IRS $3,200, and I never want to make this mistake again. Can you please help me so that I never go down this road again? And I got to thinking. I honestly do see this a lot. Not a lot with my wealth management clients at work or with my 9-to-5, because they go through tax planning and financial planning. So they avoid things like this. They pay people like myself and my company to help them avoid situations like this through tax planning. Sometimes with my individual clients that I have on the side, they don't always pay for tax planning. And sometimes it's too late, like finding out in October when your tax return is due. Or honestly, this can happen in April too. You file your tax in April, and then it's like, oh shit, I owe the IRS thousands of dollars. What can I do? Savvy Girl Money, what can I do? And sometimes at that point, it's nothing I can do. It was some planning that needs to be done beforehand. But, so if you're in a situation, let's just plan for the future. Let's just make sure this never happens again. So let me jump right into these 3 tips. So tip number 1, I want you to go review your W-4. This is the document that's here. In this document, well, you would have completed this document when you first started your job. You can find this in your HR department or on your some type of company portal where you have all of your documents you sign, or all the company's documents that they gave you to sign. So first place you want to go to is your HR department. Say, I would like to review my W-4. And when you're reviewing this W-4, I want you to pay close attention to your totals that you have. So just going through a example of how this should look. I'm looking in the camera at myself, and I just noticed that I have my little Band-Aid. I thought about taking this off, but I'm like, no, I'll leave it. This is me. This is Ashira. Today, I got my flu shot, which I hate, and I never got it before I had my daughter, but I feel like one of my responsibilities as a mom was to keep my daughter safe and healthy. So I protect her by making sure I don't bring any germs or anything into our house, by making sure I get my flu shot. She has started school, so I have to make sure I get her one too. to prevent her from getting it, but just to kind of explain why this is here. So let's just ignore that. So go to your HR department, check out your W-4. On your W-4, let's break down some scenarios. If you are a single individual, meaning that you're not married, I want to say off the bat that your total of all your exemptions should equal 1. Yep, just 1. And if you really want to make sure that you do not owe the IRS at the end of the year, I would even put 0. My recommendation to the individual that reached out to me about owing the IRS $3,200, I recommend that they go ahead with 1. I did follow up by asking them to check with their HR department, and when it came down to it, they had about 3 on theirs. And I'm like, okay, well, take me through your mindset. Why did you list 3? So I can tell you why you shouldn't list 3 when you update this form. So they said, because number 1 said to include it for myself. I said, check, that's correct. And then he said, well, it talked about being head of household. I'm like, okay, but to file head of household, you have to have a dependent. Do you? Do you have a dependent? It was like, I have a kid, but my child mom filed with the kid. I'm like, okay, so that's not for you. And he was like, well, another one said something about something else that I thought applied to me. So I added another one. I'm like, okay, to get you to your 3, right? He was like, yeah. I'm like, okay. I'm not sure what your 3rd option listed, but I'm pretty sure you weren't supposed to select it. Based on the knowledge that I have, it looks like you're a single individual with 1 W-2. So I recommend that your sum, your total at the bottom of your W-4 should definitely equal just 1. Just saying that you claim yourself as an exemption, nothing else. Once I broke it down and kind of explained that to him, he understood for the future. So make sure you do this too. If you're single, just yourself with a W-2, not even listing any itemized deductions, I really recommend you only list 1 exemption. Let's use it as an example. Say you are married. You maybe have 1 kid and you're completing your W-4 from the wife's standpoint. This is a lot like my situation. I feel like I am telling you guys my situation, but it's okay for me to get personal. So on my W-4, I list myself and my dependent. So my total equals 2. Nothing more, nothing less. Yes, some of the other questions, like head of household or some other things could apply to me, but I only list 2. I want to make sure at the end of the year, I do not owe the IRS. I also don't want to be overpaying the IRS where basically I'm loaning this money interest-free. So to be safe, I make sure I only calculate or sum up to 2 on my W-4. If you are concerned about this, go ahead and leave me a message on my Facebook page or go ahead and put it down below. That's okay. If we are asking questions below the video, other people might have the same question and we can share the response. So let's move on to tip number 2. From the message that I received on Facebook, I also followed up with additional questions. So I asked the young man if he had a retirement account. And he said no. He felt like it was too early in his career to be contributing to a retirement account. He really just wanted to focus on saving up for a house, and he just didn't want to take the extra money out of his account right now. And that was one of my recommendations, that he needs to start contributing to a retirement account. This will help you save a lot because it reduces your taxable income. One of the best ways to reduce your taxable income is to contribute to an individual retirement account. or better known as a IRA. You want to make sure you're doing this. Not only are you reducing your taxable income, but you're also saving for your future. I cannot say enough, and you probably will hear this over and over in my videos. We have to save for our future. We have to contribute to our individual retirement account. And for 2017, you can contribute up to $5,500. So your taxable income will be reduced by that $5,500. You'll have that money for the future, and you will not have to pay taxes on that income. You can get no better than that. In the situation of my Facebook message, I proceeded to ask the individual if he ever thought about itemizing instead of taking a standard deduction. And he said, well, what is itemizing? Which a lot of people don't know about itemizing, but it's another option you have. A lot of us just take the standard deduction. But I recommend the itemized deduction to individuals or families that have medical expenses, who pay, for individuals who pay real estate taxes, or who have mortgage interest, who make contributions to any charities, especially with all the hurricane release funds that's going on. If you're contributing and you're helping out your community, if you're helping out individuals in different states, you want to make sure you are listing these items on your tax return. You can also list your tax prep fees and other deductions that might be subject to the 2% limitation. But that's okay. You want to make sure you are including as many items that you possibly can. So look into itemizing, especially if you own a home. If you're not there yet, that's okay. We can keep this thought in the back of your mind for the future. It's all about planning for your future. So guys, like I said, if you have a question that you would like for me to answer about finances, please list them below, or you can even send me an email. You can send me an email to savvygirlmoney@gmail.com. You can follow me on my Instagram and my Facebook page, and that's at Savvy Girl Money. Surprise! Everything is Savvy Girl Money. This is the Savvy Girl Money world here. And please make sure you subscribe. I am trying to get my subscribers up. So I would love if you subscribe to my channel. You'll receive notifications as soon as I post videos. And if you have not done so, please make sure you visit SavvyGirlMoney.com. I list my one-on-one services there that you can book with me. You can also sign up for a free consultation to discuss any financial issues that you might have. So thank you guys for tuning in. And like I said, if you have not done so, please subscribe to my channel. And I'll see you guys again next week.